well, it's gravitating back towards the low point of the day. Not quite there yet, but it's getting there. And the stock that's responsible for that, actually, it's two stocks, both PSU banks. Pull out intraday chart of both SBI and Punjab National Bank, and both of them are now gravitating lower. In fact, yesterday you had seen both these stocks recover quite a bit from the low point, but as we speak now, SBI is clearly at low point, and PNB as well. There's quite a bit of decline that you've seen in both these names. Let's get some perspective then. IV Subramaniam, MD and CIO of Quantum Advisors, now joins in. Subramaniam, hi, good morning. First, a word on the bank nifty itself and the kind of selling that we have seen of late, especially in private sector banks. Is this a good point to accumulate, or would you wait for further correction?
In some of the private sector banks, I would still wait. I think while the correction looks good, but in terms of valuations or in terms of making it very attractive to buy, from my side, I would still like to wait for another 10% decline in many of these stocks, at least 10 to 15% kind of decline. Having said that, there are some stocks which we like even at the current valuations, both in the private sector and the public sector space. So it's really a matter of choice within the sector. Some look cheap, some, despite the correction, still look expensive. And in those kind of stocks, I would like to wait.
Okay, but do you think that the valuations between public and private sector banks is now going to narrow much more significantly, the gap between the two? We saw it with Axis Bank. Do you think that valuations, for example, could trend lower?
No, it could trend lower, but I don't think the long term in the long term that the difference between a PSU valuation and a private sector valuation would shrink based on just this one quarter's number. I still think the private sector banks can probably grow faster. They can eat into the market share of many public sector banks, and also they have a better products, asset quality, they should be able to control. And given these, I think in private sector banks the valuations are likely to be still much higher than the public sector banks. So that's still a long way off before they start to converge. But in the immediate term, you may find the spreads between these two shrinking a bit. And as I said, if the private sector banks decline by another 10-15%, maybe it will start to look attractive from a longer term perspective.
Okay. Subramaniam, a word on fund flows. We have started to see quite a bit of selling from domestic investors. What do you think could be the trigger for that, and would that be a bit of a cause for concern?
I don't think it will be really a cause of concern. I think people who have been investing in the last few months or even close to a year, some of them may be out there to book profits, having completed more than holding it for 12 months. They would be selling. And second thing is, given all the volatility in the international markets, you still have this issue of whether the foreign flows would be strong or not. I guess some retail investors who are adept or who are clued on to what's happening globally may also feel nervous, and that also could be a factor for near-term redemption. So I don't agree to the view that they should sell. I still think there is a huge potential in India and one should remain invested. But these are some of the traits which could lead to some investors booking profits and getting out. And as a result, you are finding some selling coming in.
Okay. We saw a lot of the auto companies, in fact, expand their margins this quarter because of the benefit of lower commodity prices. Is that a theme that you would explore more thoroughly through the end of the year?
No, I would explore that theme more in terms of the fact that I still feel very bullish on two-wheeler and four-wheeler companies, largely because the long-term demand trends would still be very strong for these companies. I've been repeatedly saying earlier also, the public transportation system is poor in India, and therefore you need probably some private vehicle. And a good way to start would be a scooter or a motorcycle. So therefore, they would, I think, in the long run do well. They means the whole industry would do well. Within that, one needs to pick and choose which companies would, gain market share or lose market share. Having said that, the near term, they have the benefit of the lower raw material prices, so therefore you have seen some margin expansion. But whether it will sustain or not would be a function of what's happening in the market space. Today, if you go and try to buy a car, you still get decent discounts, and if you are really picky, you could really bargain and get a higher discount. So that means somewhere the lower raw material price is also being passed on to the consumer. So for the margin expansion which you are seeing now may not sustain, and it may get reduced over the next couple of quarters. But the longer term trajectory, longer term growth profile still looks good, and that's what drives my interest in that sector.
Okay, so which are the broader areas where you are most bullish on, and if you could give us a couple of stocks as well?
No, so we are bullish on many things in the consumer discretionary space, like it could be hotels or media, it could be the automobile stocks. I also like the banking space. The large IT companies I still like. I think the demand conditions are still fairly robust, and these companies would continue to benefit from the huge spend which is happening across on a variety of factors, including digitalization, etc. So that I am bullish. The areas of concern for me continues to be on valuation in certain sectors. I am not yet convinced that consumer staples should be valued at such a high level, or even some of the pharmaceutical stocks. Those two areas I am staying away right now, and even some of the building material, particularly cement. If you see cement, I don't think they are cheap, they look expensive, and the underlying factors are not as bullish as it was earlier. The long-term demand looks good, but pricing power seems to be weak, and despite the decline in oil and certain benefits which would flow through, the demand conditions are so weak that the profitability of these companies may suffer a little more in the near term.
Okay.
So these three sectors are areas where I'm concerned on valuations. The rest I'm quite happy holding it on.
Okay, just a quick last word from me then, or last question from me rather. But you were talking about the consumption theme. Something similar to that would also be Just Dial. That stock is down 10% reacting to its numbers. Any thoughts in terms of the numbers or the valuations?
No, I have no comment on a specific stock. I can only say that the whole internet space and anything to do with internet looks expensive, and therefore the ability of the investor to handle any near-term negative news is low. So the moment any negative news comes in, I think there is bound to be a pressure on the stock prices.
All right, Subramaniam, thanks a lot for your time today. So that's the call on the market. Well, one stock which we should now pull intraday chart of is Mphasis. It's actually at a new high.